This is the trade that we just took. This is actually a very nice 6 hour trade that we took, and I call this, I think, only in my private group. Right, so this is the logic behind this trade. These are our simple entry model. These are our simple entry model. What are we looking for? We're looking for this pattern in our lower time frame, and we want to see this pattern occurring in our intermediate time frame valid point of interest. Then we go to our higher time frame to see if this trade is in line with the directional bias. Right, is it in line with the order flow? If it's a bullish setup, is the order flow trending? If it's a bearish setup, is it a bearish order flow? So simple like that. So that's what we are looking for. Now, if you look at this trade, you can see the same logic happened here. Now, if you go to something like a 30 minutes time frame, you can see it's clear. So let me try to, before we go back to this, I want to explain this setup. So what is our setup? Basically, let's get rid of this one. So basically, what we are looking for is we want to see a liquidity sweep, then a break of structure, then this can actually can actually form in two ways. So these are the two ways this can form. It can actually form in these two ways. Either way is still the same logic. So basically what we are looking for is we want to see one, liquidity sweep, two, a break of structure and structural liquidity, and we want to see that it's actually occurring in our a valid intermediate time frame point of interest. So now what do we have here? This can actually form in two ways. We can actually have a liquidity sweep, then a break of structure, then a second break, then this previous lower high will be forming as our inducement, our liquidity, structural liquidity. The price is going to take out and tap us in. So once we see this, then we can place our limit order. That's my entry model. And the second way this can occur in form of a liquidity sweep. Then price fail to break this, to have a market break of structure, then forms a structural liquidity, and then finally breaks it. So it's still the same thing. The main idea behind this is that we're looking for liquidity sweep, break of structure, and structural liquidity, and it should be forming an intermediate time frame point of interest. So now, what do we see in this trade? Now, this trade actually follows the same rules. So what do we have here? We actually have price. You can see what price is. Price swept liquidity, major liquidity at this point. After it swept liquidity, you can see that price actually swept liquidity at this point. This is where the structural liquidity, get rid of this and make it clear. So you can see that we have a structural liquidity. We have price sweeping liquidity at this point. Then when price sweep liquidity, we break structure. After we break structure, price retraced, forming our structural liquidity, then traded higher. So now what do we have here? All the criteria that I've met, at least three of the criteria I've met, which is liquidity sweep, then a break of structure, structural liquidity. Then before we actually put active limit order, we can place our PNL indicator. As price is retracing, we just place our PNL indicator at this place. But before we take this trade, we want to do a couple more things. And what are those things? We want to go to the intermediate time frame to see if it is occurring in a valid key level. Since this trade is was taken on the 30 minutes time frame or 1 hour time frame, you can go to the 3 hour time frame or 4 hour time frame to see if it's occurring in a valid point of interest. Now, if you look at this thing, or let's just use the daily time frame for it to be clear, but that's the time frame you should use on a normal. So if you look at this thing, you can see that it's actually occurring on this other block. And if you are to read the market structure from here, you can see lower low, lower high, higher low, higher high, higher low, higher high, higher low, then higher high. All these things price is forming. So finally price retrace to this place. So as it retrace to this place, we are expecting a push to the upside to continue the normal market structure. So this pattern is actually occurring. This is our entry model is occurring in a valid point of interest, in a valid order block. Then you can also look at the higher time frame where you can see that the higher time frame is trending. So there's no need of, so it's in line, everything is in line, right? We have order flow, we have our entry model, then we have an order flow in our favor, then we also have the trend. We have a valid key level, then we have order flow in our favor. Yeah, so that's the logic behind this trade that I took. I can see this is a very beautiful trade.